Good morning, children. As we have discussed in the previous lecture that we are going to start with journals today. So format as you can see here is date, particular, LF, debit amount and credit amount. This is the format of journal. For more information you can check the first videos of journals. We are directly moving towards the question today. Okay, so the question is cash paid for installation of machine 5000. This question I have taken with a motive to explain you something that always do remember. Cash is paid for installation of machine. So obviously machine got installed only when we purchased machine. And we have discussed earlier also that any expenditure incurred at the time of purchase, that is acquisition of fixed asset, is considered the expenses of that asset only, and hence it is added to that asset particularly. So it is not an expense, rather it is included in the cost of the asset. And that is why the journal entry for this will be machine account debit to cash account. As you can see that cash paid for installation of machine. As we discussed that cash paid for installation of machine is added to the cost of machine. So we can say that it is added to the cost of machine and machine is coming into the business. Anything that is coming into the business, real account ka rule applies and it says debit what comes in. At the same time, we have paid for installation of machine. That means we have paid cash and cash is going out from the business and hence we have credited it. So machine account debit to cash account 5000. Although here in this point it is not given that the purchase value of machine is how much, so we have ignored that. We do not know the purchase value of machine, so we directly have started from the installation of machine. Okay, and the next is, as you can see here it is written in bracket, cash paid for installation of machine. So after every journal we have to write a narration. Generally, narration starts with the word being, that is, being cash paid for installation of machine. But it is also correct if you just write cash paid for installation of machine. That's it. Moving towards the second point is goods given as charity. Now do remember that we have given goods as charity. So charity is a kind of expense because it is not going to get any return in future. Sorry, it is not going to get any return. So charity being an expense comes under nominal account, and nominal account ka rule says debit all expenses and losses. So we have debited charity, that is charity account debit. Now, since we have given goods as charity, that means our goods are being reduced. Goods, I have already told you people, when we'll purchase, purchase will be debited. When we'll sell, sales will be credited. But here goods are given as charity and not in the form of sales. So we cannot credit sale. Rather, it is considered that our purchase have reduced. For example, let's say that we had purchases worth rupees 50,000. Now when we are giving goods worth rupees 20,000, so obviously from 50,000 we have given 20,000, so we will left only with the 30,000. That means our purchases got reduced. And since purchases do have a debit balance, as it is a real coming into the business have a debit balance. Since purchases do have a debit balance, when it has to be reduced, it will be credited, and that is why the journal entry becoming here is charity account debit 20,000 to purchases account. One more thing, do remember it very clearly. Debit amount goes just in front of debit in the debit column, and credit amount goes just in front of credit at the credit column. Moving towards the next point we have is interest charged on capital at the rate 7% per annum when total capital was 7 lakh. So students, do remember that we had a capital of rupees 7 lakh, and on that 7 lakh we have to charge interest at the rate 7% per annum. So first of all, do remember what is capital. In the first lecture of ours, we have discussed that capital is the amount which is invested into business by businessman. So since capital is given to business by businessman, if business has to pay interest, it is an expenditure, and every expenditure comes under nominal account, which says debit all expenses and losses. So here interest on capital is an expenditure, and that is why it has to be debited. So interest on capital account debit. And whom it is to be paid? To businessman. So he must be credited, but we already have discussed that we do not write the name of businessman since it is his capital which is going to increase, and that is why we'll credit the capital. So the journal entry coming here is interest on capital account debit to capital account. Now where does amount come from? Let's have a look. The amount of capital is 7 lakh, which bears interest of 7%. That is into 7 upon 100. 0, 0 got cancelled. 7 sevens are 49. So this comes to 49,000. Here we have. Moving towards the next point is received rupees 12,000 of a bad debt written off last year. Now do remember what is this. We already have discussed bad debt in our previous videos. You can check them. That bad debt is an amount which we have written off. For example, there was a customer to whom I have sold goods worth rupees 20,000, and I kept calling him, but he did not pick my call. So I considered that customer is not going to turn. So I thought that I'm not going to receive that money, and I decided to write it off as bad debt. That means it is the amount that cannot be recovered. So it was a loss, and loss has to be debited. But today what is happening? That customer have turned to me and paid me the balance. That means bad debt is recovered. So when bad debt was loss, and if I have recovered my loss, it means that I have made a profit, and because of profit it need to be credited. So the journal entry here you can see is since we have received cash, so cash account is debited with rupees 12,000, and this cash we have received as a gain, which is called bad debt recovered, because earlier it was a loss and now it is recovered. So two bad debts recovered account, 12,000 and 12,000. Okay, moving towards, but before we move forward, since we have to change the page, so what we are supposed to do here is we have to take the total. we have to take the total. So 5,000 plus 20,000, that comes to 25,000, 35,000, 37,000, 37,000, 77,000. 77 plus 9 comes to 77 plus 9 comes to 86,000. So here we'll write total of 86,000, and here we'll have to write balance carried forward. Balance CF. That is balance carried forward. And when we'll move towards the next page, we'll start here with balance. We'll start here with balance brought forward. That is 86,000 and 86,000, both debit and credit. And then we'll move towards the journals. Okay, so the next point we have is goods destroyed by fire. Now here what is happening, that sometimes it happens that there was goods in our storeroom, in our godown, but somehow it caught fire and goods destroyed because of that. So if goods have been destroyed due to fire, definitely it's a loss because we cannot receive anything for that. Or even if we'll receive insurance claim, that will be later on. So that will be having a reverse entry for that. But in a current situation, if goods have been destroyed by fire, so it is technically a loss, and any loss comes under nominal account, which says debit all expenses and losses. So what we have done here is we have passed a journal entry for loss by fire account, debit 20,000. Now this goods are destroyed by fire, so definitely my purchase is going to get reduced, because the purchase which was earlier more, it is definitely going to get reduced because our purchase have been destroyed. So since purchase is reducing, which was having a debit balance, to reduce it, we'll have to credit it. So journal entry came here is loss by fire account debit to purchases account. Loss by fire debited because it's a loss. Nominal account rule says debit all expenses and losses and credit all incomes and gains. So here loss by fire has to be debited, and since purchases do have a debit balance, and if it is to be reduced, we'll have to credit it. Moving towards the next point we have is rent outstanding. Now what is the meaning of rent outstanding? It means we have taken a service for which we have to pay something, but we have not yet paid. So simply here, if I have to pay rent, rent is my expenditure, and any expenditure is a kind of loss which has to be debited. So here we can see that rent account has been debited with 10,000. Why? Because it's an expenditure, and expenditure need to be debited because of nominal account. But this expenditure we have not yet paid. That means it is outstanding. So technically cash is not going. We have to credit that person to whom we have to pay. And here that person is a representative called outstanding expenditure. So here rent account debited because of expense to outstanding rent account got credited because it is to be paid, and hence it's a liability which got credited. The next point we have is interest on drawing. Now if you do remember the first lecture, drawing is an amount withdrawn from business by businessman for his personal use. Now technically think, if interest charged on capital is an expenditure, so any interest that we are going to charge from businessman on drawing will be a income, and being income, it has to be credited. So here what we have to do is will credit interest on drawing. But what can be debited? Obviously drawing, because when we are charging interest on drawing, capital will reduce more, and to reduce that capital we need to debit the drawing. So the entry will be drawings account debit to interest on drawing account. You can even think from the another point of view. Drawing do have a debit balance, and whenever it is increased, because interest is charged on drawing, that means drawing will increase. So whenever it is increased, it will has to be debited more. So drawing has to be debited, and interest on drawing being an income has to be credited here. The next point, that is the last point we have. Here we have is Sudhir Kumar, who owed me rupees 30,000, has failed to pay the amount. He pays me a compensation of 45 paisa in a rupee by check. What happened? That there was a person called Sudhir Kumar. He somehow is not in a position to pay his total debt. And that is why it is decided that if he was supposed to pay someone 1 rupee, he'll be paying 45 paisa. So students, do let me know that 1 rupee consists of how many paisa? So you'll say 100 paisa in a rupee. So out of that 100 paisa, we can recover only 45 paisa. And if you do remember your basic mathematics, anything out of 100 is considered that percentage. So we can say that 45 out of 100, that means 45%. So here technically what is happening, Sudhir Kumar, from whom we had to receive 30,000, can pay only 45%. That comes to 13,500. That means from 30,000 we can receive only 13,500. So if from 30,000 we can receive only 13,500, we are going to have a loss of the remaining amount, which is 30,000 minus 13,500, which comes to 9 minus 3, 6, and 2 minus 1, 1. That comes to 16,500. So technically, in place of 30,000, we are going to receive 13,500, and 16,500 is a loss. So let's check the journal entry, and the journal entry here is bank account debit, because money is coming not in the form of cash but in the form of check. If we are receiving check, so definitely check will be deposited into bank. That means we have received that money into our bank account, and bank being receiver has to be debited. So bank account got debit with the amount of rupees 13,500. Now that 16,500 that we could not receive is a loss, and that loss is bad debt, because it is the amount of debtor that we are not likely to receive, and it is called as bad debt. So technically loss being nominal account, has to be debited. So bad debts account also got debited with the amount of rupees 16,500, and it is received from Sudhir. So Sudhir is a giver and hence his account need to be credited. 13,500 plus 16, that comes to 30,000. So technically we have completed his total account. We have technically closed his account. Here at the end what we have to do is we'll take the total of all the parts of journal entries, and here we complete with our this journal entry. Hope you people would have understood. Please stay home, stay safe. Thank you.